Assalamualaikum to Madam Farini binti Morni. Before we started, I would like to introduce our group member, RAFHAN AMIR bin RAHMAT, Henrickson Jeremy Anak Ali, AHMAD ZAIM bin BOLHI, and me myself, Muhammad YAZIID IZZUDDIN bin MOKHTAR. For this group assignment, the company that we choose is the Khind Holding Berhad, where this company was founded in 1961 by Cheng King Fa, and by the late of 1970s, the company started to supply electrical accessories. The company is involved in electrical and electronic industry, where this is one of the major industry in Malaysia. In order to survive in the huge market share, there are few strategies that's been implemented by the Khind Holding Berhad. The first strategy is a lower cost strategy, where they offer a cheaper raw material and labor in order to maintain their product at a lesser cost. As a result, they managed to maintain their company share market and also increase their company share market. Second strategy is a differentiation strategy, where they introduce new innovation and product. For example, in 2009, they introduced a conserving energy light, where this product differentiate them from other competitors. And the last strategy is a differentiation focus, where they focus on a certain target market and geographic. Where for this company, they label themselves as a middle brand, and their focus is on a low and a middle income level.
Assalamualaikum and very good day to Madam Farini. My name is RAFHAN bin Rahmat, and moving on to the common size. In the balance sheet, it shows the increases in the cash and short-term investment account receivable, while the inventories are decreased from the past 5 years. As a total current assets are increasing from year to 2016 to 2020. As for the current liabilities, the account payable is increasing, as so the total of the current liabilities, but the changes are not that big or significant. The total equity also increased from 48.12% in the year 2016 to the 49.15% in the year 2020. For the common size of income statement, the changes in the COGS and gross profit are very different throughout the 5 years. We can see in the income statements, common size shows that the company has a high total operating expenses, even though in the year 2020 it showed a slight decrease, making the company net income is only 2.75% in the year 2016 and decreasing to less than 1% throughout the year 2017, 18 and 2019, and increasing only to 5.95% in the year 2020. Moving on to the financial ratio, we can see overall the company has the ability to meet its maturing obligations through the current ratio and quick ratio. As the current ratio and quick ratio is more than 1 times, even though the ratio is lower in the year 2020 compared to other years, because the total current liabilities are increasing each year by year. Only in the year 2018, after deducting the least liquid assets, which is inventories and prepayments, the quick ratio is 0.95 times, which is a little bit lower than 1 times. The average collection period and daily sales inventories shows the day company tax are decreasing due to the number of accounts receivable is increasing, which the company able to collect more accounts receivables, and inventory decrease respectively due to the generating sales through the inventories. Next, for the efficiency and effectiveness, we can see the ratio of account receivables turnover, inventories turnover, fixed asset turnover, and total asset turnover is the highest in the year 2020 in comparison with the other past 4 years ratios. This shows the company is efficient in collecting their receivables, converting inventories into sales and generating sales from its assets. As for the profitability ratio, the ROA and ROE shows a significant increase in the year 2020 after a decrease in 3 consecutive years, which is 2017, 2018 and 2019, because of the increase in the total assets and total equity. For the operating profit margin also shows an increase in the year 2020 due to the increase in the earning before interest and tax EBIT. For the gross profit margin and net profit margin show a huge difference in the profit margin, where we can see in the year 2020 gross profit margin is at 32.31%, but the net profit margin only at 5.94%, which show the difference is too big. This difference is due to the high operating expenses that the company having right now. Lastly, for the debt and leverage, the company is able to reduce their debt ratio as the total debt for the company is decreasing. For the debt to equity ratio, the percentage is high, indicates that the company use more borrowing to fund its fundings, and the long-term debt to equity ratio in the year 2020 is at 15.57%, meaning the company has a good long-term debt to equity ratio, as the percentage is decreasing in the comparison with the past 4 years. Lastly, for the time interest earned ratio in the year 2020 is the highest, as the company is able to increase its earning before interest and tax EBIT, meaning they are able to cover their debt obligations.
Hello, my name is ZAIM bin BOLHI from class BA2425B. First, I will explain evaluating cash flow of operating activities. In 2017, the cash flow from operating activities dropped from previous year 2016. One of the main reasons why downtrend occurred in 2017 is that the company's accrued payable have negative amount, which is negative 7,652 ringgit. In 2018, the cash flow decreased to negative 4,740 ringgit because they have negative amount of inventories. Besides, the change of working capital also contributes to negative cash flow for 2018. The cash flow from operating activities for Khind Holding Berhad recovered and increased dramatically in 2019. One of the variables that contributed to the successful acquisition of a large market share was an increase in overall inventory. The cash flow from operating activities fell in 2020. The decrease in change of work capital and inventories in 2020 has a negative impact on cash flow. Next, I will explain more evaluating cash flow of investing activities. As for cash flow of investing activities in year 2016, it produced negative amount of cash flow, which is negative 6,886 ringgit. This is because the company had spent financing cash flow items such as fixed asset or capital expenditures. In the year 2017, the amount shows slightly increasing compared to last year. The decreased amount purchase of fixed asset which affected on cash flow of investing activities. Therefore, the company show few improvement of the cash flow. Cash flow from investing activities rise in 2018. The increased amount of total purchase of fixed asset and capital expenditures companies, which make the result increasing. Khind Holding Berhad cash flow from investing activity decreased in 2019. This is due to the company's purchasing investment for negative 6,371 ringgit. Khind Holding Berhad cash flow from investing activities is rising again in 2020. This is because the company get bigger amount of sale from the previous year. Lastly, evaluating cash flow of financing activities. In 2016, Khind Holding Berhad cash flow from financing activities was negative, totaling negative 10,413 ringgit. According to our study, the primary reason for the company negative cash flow is total dividend that it had to pay. In 2017, Khind Holding Berhad cash flow from financing activities increased. According to our analysis, the company managed to pay less amount of debt from previous years. In the year of 2018, The cash flow of financing activities had increased compared to last year. The positive amount of debt that company managed to get in 2018 produced increased cash flow compared from previous years. In the year of 2019, the cash flow of financing activities decreasing. The decreasing amount of long-term debt is one of the factors. The cash outflow is more due to the cash dividend payment out of the net profit. The cash flow of financing activities for Khind Holding Berhad also dropped in 2020. The factors influence the number of financing activities are paying dividend. Besides, the company also issues negative number of debt.
My name is Henrickson Jeremy. Our recommendation for Khind Berhad Holding is that firstly, for the liquidity ratio, given the improvement in all liquidity ratios in year 20 compared to year 19, the company can satisfy its maturing obligations because the liquidity level is regarded strong, even though the SCP is still considered high with more than 30 days in year 20. In terms of AR, Khind Holding Berhad should reduce the times it takes for a business to obtain payments owed by its clients. Offer early payment discount and discourage late payments are two approaches to decrease SCP. Designing a discount structure for debtors who pay ahead of the credit period will encourage some debtors' payment to clear sooner. The discount can be designed with the company's return on investment or the cost of short-term liabilities in mind. However, if the debtor is paying late, charging interest to debtors who make payments after the credit period has expired can reduce the number of debtors who pay late. A more extreme step could be to limit or restrict future sales to debtors who have a history of late payment. Next, regarding Khind Holding Berhad asset utilization, there are a few recommendations from us that Khind Holding Berhad can employ to increase the company efficiency in managing assets and efficiency in handling operations. To begin with, Khind Holding Berhad should examine its credit practices to ensure timely collection of receivables to improve account receivable turnover. Next, Khind Holding Berhad should lease their fixed assets rather than buy them to enhance their fixed asset turnover. This is because rented equipment is not considered a permanent asset. Aside from that, the corporation should sell assets that do not contribute to the bottom line on a regular basis. Any fixed assets that are outdated and underused should be liquidated as soon as possible. As for the operating performance and ROI, Khind Holding Berhad operating strategy must be revised. Despite having a stable gross profit margin, their realized profit has been swallowed out by the operating expenses. This can be accomplished by reviewing price policies, changing suppliers, lowering labor costs, and reducing production waste. The firm needs to strategize its business plan. The firm can diversify and focus with their most profitable business that will not affected like the current pandemic hit. Furthermore, they also can come out with a venture capital plan. Lastly, as for capital structure and solvency, we recommend that Khind Holding Berhad raise the amount that the debtor pay monthly toward their debt, as extra payments can help us reduce our overall debt faster. Khind Holding Berhad can reduce their debt ratio in a variety of ways. They can, for example, increase the amount they pay toward the debt on a monthly basis. Extra payments can help them to reduce their overall debt faster. Furthermore, the firm can explore having equity financings rather than debt financing because after analyzing their financing options in their future analysis, it is determined that equity financing is better appropriate for the firm. As for Khind Holding Berhad, our recommendation, we suggest paying down any loans, whereas when we pay off loans, the ratio starts to balance out. As a result, this can avoid incurring extra debt, as this would increase our debt to equity ratio as well. Next, Khind Holding Berhad should work to raise sales revenue and cut costs in order to increase their company profitability. Improving inventory management follows, and successfully managing the company inventory ensures that no money is wasted. On the contrary, make certain that we do not have excessive inventory levels that exceed what is required to fill orders. Lastly, for our conclusion, after analyzing 5 years financial statement of Khind Holding Berhad, we can see from their net sales where the net sales keep increasing from the years 2017 to 2020, even though the company net income is not quite high. Still, the company is able to generate positive and increasing net income year by year. So it is critical for their business to use a variety of tactics to improve their financial performance. Finally, in terms of financial health, Khind Holdings Berhad is continuously improving. According to our findings, the company has the potential to create more revenue. Despite the limitations in our analysis, profit will be met in the next years. Overall, we believe it is reasonable to state that the business is financially stable. Okay, thank you for listening. That's all from me. Thank you.